It's about that time of day again. My name is Joseph. It's Monday evening, May 22nd. Welcome back to your nightly newsletter. We're covering crude oil, S&P, gold, euro, and FDAX this evening. Crude is sideways and right in the middle of a triangle this evening, telling us to fade the edges of the range using failure patterns until we see a successful breakout tomorrow. S&P's bullish with a wedge, but the wedge is getting very narrow tonight, telling us to look for traps and failures at previous swing levels to avoid buying into resistance tomorrow. Gold is bullish and trying to finish the double up target, but today's move didn't give the bulls many opportunities to buy low, so looking for a two-legged pullback to buy more at support tomorrow. Euro's bullish with a spike in channel, but it appears that price went a little too far too fast earlier today, so we're waiting patiently for a pullback into the battle zone on Tuesday. FDAX is bearish, but we're having two support levels getting in the way for the sellers, which is giving the bulls a great opportunity for a strong break higher tomorrow, watching both sides on the FDAX. Got a great newsletter in store for you guys. Got a big week ahead of us. We got OPEC later on this week. We got some expirations coming later on this week. We got a holiday weekend in the U.S. only a few days away. Got a lot to cover here tonight on the newsletter. Got a great video and great trades setting up for tomorrow. Before we jump in, though, I do want to remind you, though, only place to watch the full-length version of this video is on our blog here at sidewaysmarkets.com. If you're watching this video right now on our YouTube channel, it's only a small snippet on the YouTube channel. Not to worry. In the description of that YouTube video, find that link, follow that link, and come join me on the blog here at Sideways Markets for the full-length version. While you're here, don't forget, join the mailing list. I'll send you an email every evening when our nightly newsletter goes live. Follow me on social, lower left-hand corner, many different ways to follow me on social media. Why? I'm always posting important charts, links, and updates throughout the day. Social media follows on the lower left-hand corner. And please don't forget to grab your charts here for tomorrow. How easy is that? All the charts in tonight's video, have them ready on your computer for tomorrow. Follow that link below the video tonight on the blog for the charts below the video. And don't forget to grab your free pass. If you're not a member here at School of Trade, I got a free pass for you guys. Come out and join me as a guest this week in the trade room. You're going to learn more with me in 90 minutes on that free pass than you will anywhere else on the interwebs. I can guarantee you that. If you're not an advanced member here at School of Trade, grab that free pass in the upper right-hand corner. If you're brand new here, don't forget the frequently asked questions, and I'm always here to answer your questions along the way. Hit me up on the live support tool on the right-hand side of the website. Hope you guys had a great weekend out there. Boy, oh boy, I can't believe my Celtics pulled one out on LeBron. Oh my goodness, I didn't believe my eyes. I'm glad I watched the whole game. Boy, I'll tell you, that series was looking pretty ugly there at first. Anyways, we'll talk about that more at the end of this. Let's jump in. Hope you guys had a great weekend, though. What a great weekend to be alive. Beautiful weather here in Los Angeles, and we got more coming this week as well. Tomorrow's Tuesday, May the 23rd. Let's take a look at what we have on the news here for this week. Now, first of all, looking at the overall week this week, we're going into a holiday weekend. Now, not this weekend, but next Monday, the 29th, is the Memorial Day weekend, right? The Memorial Day holiday. The 29th of this month is a Monday. Don't ask me why they put it on Monday, but Monday is Memorial Day in the U.S. That means Friday is going to pretty much be a half day, right? And, of course, Monday is a holiday. Now, markets will be open electronically both Friday and Monday, but this is a big holiday in the U.S., which means low volume is expected on Friday, and I would be surprised if we see more than an hour worth of trading right on Monday. We'll talk more about that as we get closer, but be aware, really this week is really all Monday, Tuesday, Wednesday, Thursday, right? So Friday, kind of a half day. We got some big news on Friday morning, so we should be able to get some action for a few hours on Friday morning. But again, just give you a heads up, this week's going to be weighted towards the front end, right, of the week because we got Memorial Day on Monday, next Monday. But I'm telling you right now, you're going to start smelling the gas grill, right, getting fired up on Friday ahead of that big kickoff of the summertime on May 26th. So Friday, again, half day on Friday. It's a holiday on Monday, so a little bit trading early in the morning on Monday, but pick your spots here early this week because Friday and Monday are going to be really tough, right, to trade because of the volume being so low. Another thing to keep in mind on is Thursday is the OPEC meeting, right? Now remember, the meeting just means supposedly we're going to hear some sort of official production cut. We talked about that last week. If you recall, last Monday we heard about OPEC talking about a 9-month production cut in combination with Russia that would put this production cut right into 2018. I'm not sure what they're expecting will happen differently, right? The last time they put together a production cut, I mean, here we are again. So I'm not sure what the expectations is for that. Obviously, we've had some bullishness ever since last Monday's announcement came out. So I'm not sure how the market's going to react when they hear it again. You know what I mean? We've already kind of heard about this, but bottom line though is we know Thursday is that May 25th. That's the meeting, right? That's the OPEC meeting. We're already seeing crude start going sideways here today ahead of that meeting. That may be sign of things to come this week. We won't know until we see more tomorrow. Today was a range-bound day on crude oil. We'll grab that chart in a moment. And we can anticipate, right, with the holiday weekend coming around the corner and with OPEC on the 25th on Thursday, inventories being on Wednesday, this might be a relatively, I don't want to say challenging week here for crude, but we may see quite a bit of ranges and a little bit low volume as well. Today was a pretty good day, right? So I'm not going to complain. Just giving you a heads up, Thursday with that OPEC meeting, and then again, Friday and next Monday, right, going to be the long weekend coming around the corner. Now that we have that out of the way, so you guys can plan your week accordingly, get to it early this week. Again, ahead of that holiday weekend coming around the corner. Now, speaking of getting it to it early, tomorrow the 23rd, we got news, a peppering here at 3 a.m., 3:30, and 4 a.m. tomorrow morning in London. If you're trading the London session tomorrow, be aware of that. And of course, joining me tomorrow morning in the trade room, we'll open the trade room up at 8 o'clock Eastern time, as we always do with all of our advanced members. And we have news at 9:45 and 10 a.m. tomorrow. I'll tell you, I always love getting news around 9:45, 10 a.m. because we usually don't have any problem with volume early in the morning. It's that later half, right, that second half of the morning after 10 a.m., that's when we definitely could use a shot in the arm from the PMI composite flash and the new home sales. That new home sales number will definitely be a big headlining number tomorrow morning at 10 a.m. Eastern time. Other than that, though, again, holiday weekend coming up. Thursday is OPEC. Get to it early this week. Tomorrow, 3 o'clock to 4 o'clock in London, and again around 10 o'clock tomorrow morning, right, in the U.S. session. Don't forget, we're going to trade this entire strategy tomorrow in the trade room. Come out and join me. We open up at 8 o'clock Eastern time with all of our advanced members. Now that we have that out of the way, and I appreciate you being patient with me about getting that out of the way here. I want to make sure you guys on the plan here in the big picture this week. Now let's jump into our charts. Crude, S&P, gold, euro, DAX tonight. Starting off with crude tonight. Crude is sideways and trading in the middle of a range ahead of Thursday's highly anticipated OPEC meeting. Now the plan for trading with a range is to buy the low, sell the high, avoid the middle, and focus on failures until we see the buyers or sellers get a successful breakout of this range tomorrow. The most important thing during range days is to stay patient in the middle, waiting for an attempted breakout and then using failures to send price back into the range. Now, the very first thing you see on this chart is that we are literally right in the middle of that trading range, right around this 51.06. The next thing we see is that this triangle is just about finished. Right? Now, the good part about a triangle is that when it gets narrow like this, we usually see a nice explosive move that we can try to fade back down. I also want to kind of encourage you guys to keep an eye on this bow tie pattern for tomorrow, right? Possibly into a triangle, into an expanding triangle on the opposite side. We have seen quite a few of these, right, in the year 2017, right? So basically, as this triangle finishes, we can then start to use the triangle in the opposite direction, right, on the opposite side, as it gets wider, right? So we definitely love that. And so watch for buying and selling opportunities using that triangle on the opposite side. We've seen quite a few of them this year so far. So two big clues here. We can definitely see the triangle. The triangle's pretty darn easy, right? Relatively narrow range here today. Again, we got a pretty big news event on Thursday from OPEC. We'll see how the rest of the week goes here. Right now, the plan is pretty simple. We get some measured moves above, some measured moves below. Really, all we're trying to do right now is get it up so we can sell it back down, get it down so we can buy it back up. And really, ultimately, until these buyers can see a strong breakout pullback that holds and keeps going, or until the sellers can show us a strong breakout pullback that keeps going until we see this market really break out and hold that pullback. We're going to keep looking to fade these edges here, buying low and selling high going into tomorrow's session. Key to a good triangle, though, is watch these support levels below and watch these resistance levels above. These will all be really important. Unlike a trading range, where a trading range only has the high and the low, the triangles have the highs above and the lows below, right? So try to get this market down into that support level, one try, two try rule, and then back up in. It may go lower, right? It may jackknife lower and then one try, two try. The key is really focus on getting that market outside of this range. Get it as far away from the middle of this range. You don't want anything to do with the middle of this triangle. The bigger the breakout, the better. As long as they don't hold the pullback after that breakout, we will continue to look for those failures going back into that range. So look for the market to dig outside, dig down in, two try rule. Bears can't hold the pullback and back up in. Price goes up. Bulls try to hold the pullback. If they can't, we go back down. And again, use those levels of resistance above, use those levels of support below, use the two try rule to focus on failures. Remember, we covered this whole entire process in the intermediate course, and the setups are in the advanced course for all of our members here at School of Trade. Stay away from the middle, fade the edges, use those measured moves as good areas of support and resistance. And again, stay open-minded to this, but wait patiently for proof of a successful breakout pullback. I have no problems with a breakout, but I need to see some proof before we do anything on that. Up and back down, down and back up until we see some proof going one way or the other. Next up here on the S&P, moving from the crude over to the Emini. S&P is bullish with a spike and wedge, which tells us to look for traps and failures at support levels with a target going back up to complete the measured move tomorrow. One thing that stands out on this chart tonight is how narrow this wedge is becoming, telling us to beware trading inside the wedge, focusing on buying two-legged pullbacks off the highs to avoid buying into resistance levels tomorrow. Right off the bat here, this day began as a channel. You'll notice here the day begins easily as a channel, down, up, down, but then of course it fails to finish off rotation, and now it's starting to look more like a wedge. You can call it a spike and wedge, you can call it a wedge if you want, but that wedge tells me two things. One, it gives me resistance at the vertex of the wedge, right? The place on the chart where those two trend lines come together, that will be resistance. You'll notice how it lines up perfectly right along with that measured move. So that area up there becomes resistance. The next thing it tells me also is a wedge is that as the wedge gets narrower like this, nobody wants to buy into that falling resistance, that resistance trend line, right, coming in overhead. So as the wedge gets narrower, we're not able to really justify buying inside that wedge, which usually results in a nice deep pullback that we can buy low tomorrow, right? Look for that battle zone to be used as well. So the wedge right now tells us we know where they're hunting for. They're hunting for that 97 area, right? Get that measured move up top as a good target. Measured move makes for a great target as well. I'm not too worried about this prior month high just yet. As we go into the end of the month, we'll start worrying more about the prior month high. I would definitely be watching that prior week high later on this week. But again, beginning of the week, I'm not going to worry too much about that right now. My big concern right now is getting into this buying low on the way up to that measured move. So how do we do that? Well, again, anytime we see this wedge getting real narrow like over here, we'll start looking for pullbacks. Pullbacks, there could be many different ways in which we get good pullbacks for this. The most common at this point in the game is going to be a two-legged pullback to a prior area of support, right? One option into that battle zone is a two-legged pullback. Use a trend line, use that trend line as an area of support, right? And buy low. Hey, it also might be a failure, right? Failures happen all the time too. Strong move down, bears try to hold the pullback. They can't hold that pullback, and the buyers buy into their failure, right? So seller failure, trap low, two-legged pullback, right? It could also be as short as a trap low, strong signal candle, right? Trap low. So trap low, two-legged pullback into support, failure back. Hope you had a great weekend out there. Get a big week ahead of us, a short week ahead of us. Again, OPEC on Thursday. Holiday weekend coming right around the corner. I can't believe it's already the Memorial Day weekend coming right around the corner here in the U.S. And don't forget, I'll be with you guys tomorrow morning in the trade room, 8 o'clock Eastern time. Come out and join me. And please don't remember, join the free trial on the homepage here at schooloftrade.com. If you want to learn more about our trading strategies and what it feels like to be in our trade room every day, grab that free trial right on the homepage of the website at schooloftrade.com. Learn more about our beginner, intermediate, and advanced levels of membership. And holler at me if you have any questions. I'm always here to help you guys out 24/7, 365. Use that live support tool on the right-hand side of the website. Don't forget, if you're watching on YouTube right now, there's a link in the description of those YouTube videos. Follow those links and come join me for the full version on the blog or the free trial on the homepage. Guys, I'll see you same time, same place tomorrow. You betcha. Adios, amigos. Bye-bye for now.